everyone, and a warm welcome to Energy Frontiers. I am Omono Okonkwo. Here's what's trending in and around Africa's energy industry this week. The Organization of Petroleum Exporting Countries and its allies decided on Thursday not to give in to pressure for more crude oil supply in the short term. The body, however, agreed that output targets will be raised by 432,000 barrels per day from the 1st of May. Italian energy giant Eni has announced an upgrade of the Ndungu field, located in the west hub of Block 1506 in Angola. The field could hold up to 800 million to 1 billion barrels of oil. Egypt has signed an MOU with a Danish shipping company, Maersk, to explore the establishment of large-scale greenfield production in Egypt to further accelerate the supply of green fuels and the global transformation to net zero shipping. Also in Egypt, Qatar Energy has acquired a 40% stake in the North Marrakech offshore block from ExxonMobil. The International Finance Corporation will launch its scaling mini-grid program. The IFC will mobilize $400 million in private investment for electrification powered by solar PVs, beginning with Mbuji, Mai, and Kananga cities in the central DRC. Savannah Energy has signed an agreement with the Ministry of Petroleum, Energy and Renewable Energies in the Republic of Niger. The deal involves the construction and operation of the country's first wind farm in the Tahua region of Niger. The facility will consist of 60 turbines with a proposed capacity of 250 megawatts, while supporting the avoidance of up to 400,000 tons of CO2 emissions per year. South Africa will temporarily cut the general fuel levy by R1.50 a litre until the end of May 2022, looking to protect consumers from high oil prices. Next is my guest on Energy Quick Chat as he reviews Thursday's OPEC Plus meeting and more. This is Energy Frontiers. OPEC and its allied members have decided to stick to its existing strategy of gradually opening the taps, ignoring calls for more oil output to meet growing demand. In Energy Quick Chat this week, Venkat Bodetti, an international oil and gas analyst and advisor to an oil major in the Middle East, chats with me on the details of the latest decisions by OPEC+. Hello, Venkat, and welcome to the show.
Hi, Omono. Thank you. Thanks for welcoming me to make me a part of the show.
Starting with my first question about the meeting, is the OPEC Plus latest decision to ignore pressure to pump more crude in order to reduce price volatility in line with your expectations?
Definitely. What I feel is, OPEC had been in a huge pressure because, as I mentioned previously, also that there is a shortage of crude oil being produced through Russia, and Russia is a part of OPEC as well. So OPEC was in a pressure from various sources, global sources, to deliver the promises in terms of balancing the oil production. So yes, definitely, I feel that today's decision was in line.
Okay. Is this decision good enough to balance the global oil markets, or what do you think it will achieve?
Definitely. See, currently there is a demand. There is a demand that needs to be fulfilled, and that is being lacked. So at this moment, what I feel is getting more oil from OPEC is not only the solution for it. So there are IEA as well, which is also at par with OPEC body, and they also need to share the load because it's not always OPEC that is running the crude oil prices and also maintaining the balance for the entire group.
Okay, so you just mentioned that the others need to also share in the responsibility to provide more supply to growing demand, of course. So do you think that there are other options aside from OPEC Plus and from IEA?
So I feel at least for the next couple of months or so, until and unless the war cuts off between Russia and Ukraine, and then we get back to normal with respect to Russian production, and then the Russian sanctions. So there are some European countries that have put sanctions on Russia to procure oil and gas from them. So OPEC and other agencies like IEA are in a hunt of. Uh, in a hunt of the producer, a good producer and a reliable producer with the respective APIs and parameters, sulfur content parameters, and etc., who can deliver this shortage in this point of time. And currently, I feel Africa is uh, one of the front runner who can utilize this opportunity with respect to having a, a frontline discussions with OPEC and IEA. And Africa being an OPEC, Nigeria being an OPEC member, I think, like I mentioned, they should really look this as an opportunity to grow more.
Okay, now that you mentioned Africa, how will this week's OPEC Plus position affect Africa's crude oil producers in terms of growing energy demand on the continent?
So not immediately, but definitely there will be an ask from various sources for African crude, because uh, because like I mentioned, the global output has come down to somewhere around uh, 800,000 barrels a day. I mean, which is a shortage at this moment, and there are countries that can produce this amount, but at this moment there needs to be a perfect balance between the already oil producing countries as well as oil producing agencies to do the market balance. And in this case, I think Africa should really look should really look this opportunity and then move ahead with respect to the good discussions, or with respect to the OPEC-led discussions to happen, and that can fulfill what Africa is looking at. And Africa can
How
definitely,
does okay,
yeah, sorry. And Africa has a potential to grow as one of the energy producer in the near future.
okay, how does the US announcement planning to release 800 million barrels of crude from its strategic reserves play into the current market position and outlook on OPEC's production plan?
So that would really bring down a bit of existing demand, and then the prices of the crude to an extent, but not to a very drastic extent. I see that the 800 million barrels of crude, maybe I think that was a strategic reserve. Once it is depleted, to fulfill this demand in this high performing market, and I think there will be again demand coming back. So even if the price, even if the price comes down, oil price comes down because of US releasing those 800,000 million barrels, there will definitely be a shortage of crude producing in the next cycle, so that the prices will again go up.
It appears that OPEC Plus is avoiding the politics of the Russian war in Ukraine, while sanctions on Moscow are affecting supply. What's your professional view on that?
My professional view is politics is different, OPEC body is different. So OPEC body truly minds which country is able to produce and which country is not able to produce because of various reasons. Maybe the Russian and Ukraine war is escalated to a global level. There might be some geopolitical issues that some other countries might be having with respect to corruption, with respect to the funding, with respect to the currency, and etc. and all. And OPEC body does not get involved into that space. I mean, OPEC finally is a body that is a constituency of oil producing economic countries. So I don't think that politics, the Russian and Ukraine politics is different, whereas OPEC sanctions and the OPEC meeting is different. We should not mix both of them for whatever purposes it is.
So that's your professional view that OPEC is not supposed to wade into the Russian-Ukraine war,
I mean,
regardless of any pressure.
So currently, I don't think there might be any pressure on OPEC. I mean, with respect to fulfilling of demand and etc. Because the OPEC countries have lost a lot in the oil crisis during the oil crisis when the COVID has struck. I mean the oil prices gone down drastically. There were so many projects that were in between, abruptly stopped, put on hold because of the funding, because of the demand that oil was not having. Some companies also lost strategic storage, and they had to procure new strategic storages because if the making cost of each barrel is around $30 and you want and the demand asks you to sell at $22, I mean, that way some of the producers have not sold them and they have put it into strategic reserves. And so all these things, I mean, there are many things that would really influence the state of the OPEC meeting that has happened today.
We thank you, Venkat, for those insights and for taking your time to speak to us here on Energy Quick Chats.
Thank you, Mono. Happy to share my views. Thank you.
Let's track some energy products prices for you in a moment. Welcome back to Energy Frontiers with me, Omono Okonkwo. Early on Friday, the London Brent crude went down 4.88% to trade at $107.91 per barrel, while the US WTI slipped 0.41% to trade at $99.87 USD per barrel. Natural gas climbed 0.32% to trade at $5.66 USD per MMBTU, also in early Friday trade. This week in Cairo, Egypt, a gallon of gasoline cost 35.96 Egyptian pounds, while in Lomé, the Togolese capital, a gallon of gasoline cost 1,920 West African CFA francs. And that is the package for this edition of your Energy Frontiers, and we thank you for watching. You can follow the show on Frontier Africa Report's website and all our social media accounts, as shown on the screen. I am Omono Okonkwo, and I will see you next time.